Well, well, well. What the? 139,000 jobs added. What do you want me to say? Indiscrepancies in the data, man. JOLTS job openings came in nice. Yes, the day after ADP non-farm came in lower. Unemployment claims come in higher. Now they're adding jobs. Now, of course, the adding of the jobs is less than what it was previously, coming in at a reading of 177,000. The prospectus was 125,000 to come in today, so they were expecting it to be lower, but it came in higher today. What does it all mean? Where are we for the interest rates? Well, we know for a fact that the Fed is not going to be cutting in the next meeting, which is in 12 days' time. And if you are new, welcome to Traders Reality. My name is Tino. Make sure you subscribe because we'll be going live for that FOMC. You don't want to be missing out on Powell not really saying much. But it is a funny live stream, to be honest with you. You want to, if you want to just get away from live, come to that live stream because you guys say funny things in this live. And it is quite an enjoyable time. But jokes aside, ladies and gentlemen, we've got to work out now, where can we expect, or what is investors' expectations now that the data's come out? Technically, the Fed does not need to cut the rates because the work market, the labor market is still doing good. Everyone's too concerned about Trump and Elon's relationship. Like, come on, man. How can a president and a dude that owns a car company, all right, a conglomerate of companies, yeah, whatever. Why should that have an impact on the marketplace? They've got beef, so what? What does it mean for Bitcoin? What does it mean for gold? What does it mean for euro? What does it mean for safe haven assets? What does it all mean? Well, by the end of this live, you should have a good understanding of what to expect moving forward. We're going to be talking about Bitcoin's price action. Of course, yesterday took a little bit of a tumble to the downside. James Wynn, he didn't really do too well with his positions. I mean, when you're smacking out mad leverage and you use it to unprecedented levels with that amount of cash, you need a little bit of a wobble, my bro. And I'm all down for the leverage. Like, come on, I was using 5,000 to 1 back in the day. So, yeah, I ain't no alien to leverage, but damn, you're just putting money into the pockets that you're simply trying to take it from. So, with that being said, ladies and gentlemen, it's Friday. Yeah, it's Friday. I ain't doing it, man. We've got to maintain a level of somewhat seriousness. It's Friday. Anyways, here it is. Jobs added, 139,000. So, what does it all mean? Well, the employment rate has stayed flat at 4.2%. Going into the data, you can see that the average hourly earnings are going up. That is a problem. The reason why average hourly earnings are going up is because the workforces are effectively demanding more for their work, their skilled work, okay? Is it going up because inflation? The value of the dollar is so down that people are going to naturally be expecting more. At the same time, oil's price is still down. Trump was banging away today on, where is it? Here we go. We've got a comment from Trump. Here it is. Hold on a second. Let's just bring this up right now on Truth Social. Let's have a look at that. America is hot. 6 months ago, it was cold as ice. Border is closed. Prices are down. Wages are up. All right, cool. However, so are the expectations that the interest rates are going to stay high. 99.9% chance that the Fed is going to keep the rates as they are. Now, going into the next meeting, which is in 13 days' time, of course, next week, we're going to have our good old CPI data coming out. Now, they're not really putting out any projections on where they expect that the information to end up. However, if we do see that they are expecting inflation to go up because they are accusing the fact that the jobs market is starting to turn a little bit tame because of Trump and his trade policies. Now, the next big thing that's happening is US and China are going to meet. There's going to be a meeting held next week. So they are in trade talks. But the main discussion that they're talking about is rare earth. And let me explain something. Quite a while ago, China put an export cap on rare earth metals. That sent the US wild. They put a 60% cap on them. That inflated the prices of rare earth metals. China was the one that holds that. The US was going down to the World Trade saying, look, man, you can't do this, you can't do that. Just don't, do something about it, going to the courts and appealing this. Nah, they kept the cap at 60%. And the reason I know that is because I was selling those rare earth metals back in the day. So you can see a lot of people were trying to rush to these rare earth metals, and those prices were marked up very, very well. Rare earth metals, they're in your mobiles, they're in this camera, they're in your phone, TV, you name it, okay? We need those rare earth metals, and that's really what this tariff story is all about, because if Trump does not achieve what he wants to achieve with the rare earth, it's going to make it really, really difficult for businesses to operate and sell electronics, and they will naturally get marked up to significant price levels to the point where the consumer can't do nothing about it. Now, enough of that madness being discussed. Let's just go and have a look at what's going on over here. So, Bitcoin, how low can it go? Well. So, for the Platinum members, I know I keep banging on about it, but it just helps you understand what I do with guys who are part of the Platinum membership. Every Sunday, they get a market watch. And the market watch is my projections of what I expect from Bitcoin in the following week. So with all the news, all the announcements, any Tom, Dick, and Harry talking about what they think of the economy, whether there's relationship breakdowns between Elon and Donald Trump, we all have to factor that information in. In other words, I have no clue any of that is going to happen, and I have to build that into my projection. We had a projection on Bitcoin to do the following thing. There's a block resistance region right there on the violet vector candle. The idea was we would expect Bitcoin to try and make a move to the upside to then come down by the end of the week to finish at the 99,360. I missed it by not too much. We came towards the 100,357, but you can see on the 4-hour time frame how the vector candle block in principle was respected. Look at this. There's the vector block. And the block principle is so important because it helps you understand where the market's memory is going to get triggered. Some of you might look at it in terms of other aspects, whether it's a cyclical move to the upside, so M formation, drop retrace level 1, continuation to the downside. We effectively had that marked off right there because we were in a level 1. And we wanted to see Bitcoin take the nosedive to the downside, and we achieved that target. And then, of course, on Sunday, I'm going to be doing other targets on what I expect for Bitcoin in the following week. Now, this is primarily ideal for anyone that is a swing trader that wants to open a spot position, whether it's to the upside, or well, only if it's to the upside. But if you are going to consider leverage, then, of course, if we're going on a short bias, then, of course, you'd be favoring lower prices. But this week, we were favoring lower prices on Bitcoin purely off this structure. We did exactly the same thing with Ethereum. Now, Ethereum was being a pain in the ass, but we wanted to see Ethereum come down towards the 2,323. Again, this is a level 1 zone, okay? We go over to Ethereum, and you can see Ethereum did exactly that, but it was very, very tight. Didn't get quite close to the target, but we exploited this move to the downside in yesterday's setup, and we ended up at 2,382, and we really wanted, where was it? And we wanted 2,323. So I missed it off by about $50, $60 in principle. Not bad, but we did manage to see a nice $250 move on Ethereum. And then the final one, star of the show, in my opinion, would be Solana. Solana has been hard to project because it hasn't been doing too much, but we wanted to see the retrace continuation to eat the $140 mark and clear out the liquidity in this range. In the end, we ended up seeing Solana going all the way down towards the 140, the 141.61. So we got the retrace back into that entry zone, 162, and then we just rode it all the way down. Asian session range Monday, trade away from that range. You heard me talking about it yesterday. That was the logic right there. So happy days for the guys in the Market Watch. If you want that sort of flavor, become a Platinum member by going to the join bar and effectively get that video once a week on a Sunday. And of course, you get the trade setups throughout the week, which we did yesterday, and we absolutely smashed it with Bitcoin's price action. Okay, now let's move on to Bitcoin price action. Bitcoin, very good. Now, the word on the street of cryptocurrency is this. It says that lots of people have been liquidated, okay? And James Wynn, he's obviously been liquidated, a $16.14 million position, wiped, ciao, ciao. And everyone was saying that it's all because of the China story. They're blaming Elon Musk and Trump. I mean, Elon has got bigger fish to fry. We're giving that Tesla out of hours has now managed to make a little bit of a move. It's up nearly 4% in out of hours, but it did take a nosedive of nearly 15% to the downside, closed off this gap. That is just unbelievable. Now, if the market is really going to be behaving in its true action and form, then we're going to then start to understand the following story. Fed bet traders are expecting that the Fed is going to cut the rates, but traders are now lightening their bets on the expectation of rates being cut. What we've got to be careful of is this. Even though the market is expecting that the Fed is going to cut, it does not solidify the idea that the Fed will cut. Remember, the market is not the economy and the economy is not the market. The Fed doesn't care. It needs to get to its 2% target and, of course, price stability. Those are the two mandated things that they've got in their Federal Reserve book on whatever it is. But unless they get to that target, they're not going to do anything. And we can bet as much as we want whether we want to see prices going up or down. Expectations of interest rates being cut. Look, let me just explain it. This is for the next meeting. 99% chance they're going to keep rates as they are. Go to July. It's 83% chance that they're going to keep rates at 4.25, 4.5%. Going into September, when they are expecting the 2 rate cuts to come into play, the expectation is flat now. Still weighted to 4.25, 4.5%. And I'll be straight with you. If inflation does come out next week and it shows it's sticky and it's looking like trade itself with Trump is causing this problem, Fed is not going to move. They will not move, ladies and gentlemen. They do not care. They don't care the fact, well, look, Trump's banging on about, yeah, okay, if your inflation is down, according to Trump, if prices are down, according to Trump, workforce is up, average hourly earnings are still increasing. Why aren't you cutting? That's Trump's point of view. But then the Fed will turn around and be like, why should we? If we've achieved that which we want to reduce prices, to encourage the workforce, and make life a lot easier for everyone, then okay. Then we're doing our job. We don't need to listen to you to tell us to do our job. You focus on running the country, and we focus on decide whether we should be printing or not. So the Federal Reserve doesn't need to respond to Trump. And whatever Trump's metrics are in terms of whether he thinks that the prices are going down, up or not, the Fed's going to be looking at it from a different perspective. Remember, ISM data is coming in suggesting that there is a slowdown in the economy. But if you've got a strong labor market, it's reflective of the fact that companies are still taking on people. That means there's still business being moved. So that means whatever negative reading you get from the economy, naturally it's going to recover from it, which is why the Fed is still stubborn about keeping the rates as they are. Now, going into the market itself, we can see that we're seeing a lot of activity in the NASDAQ. NASDAQ is trading up 1% for the day. Just be very careful, ladies and gentlemen, because the NASDAQ does have a tendency to start rising on low volume. Going over to the market watch, if we look at yesterday's price action and on Thursday's price action, where we did see that bit of madness, we can see that, oh, they've reset it. But we've got 3 days of distribution on the NASDAQ, 2 on the S&P. And we just go over to the chart just to understand where we are with regards to the volume on the NASDAQ. Because if we don't have the volume, there's no bull market, in my opinion. Here we go. So from yesterday, you can see that there was more volume that was coming in, but it was below average and it succeeded above the last 3 volume. You know what? I'm just going to take a picture of it because there's no point in doing this if you guys can't even see it, if you're on your phones and what have you. But this is going to be helpful for anyone that is involved in stocks, just to help them understand the logic of how to read volume in terms of the stock market and investors' commitment. So here we go. Check this out. Now, in front of you, we've got this, okay? So this chart is the volume bars of the NASDAQ composite, not the NASDAQ 100, not the top 100 tech stocks. It's the whole tech market in the US, okay? Now, if you go down to the bottom, I'm making reference to these these pink and blue bars. The red line tells you that volume is above average. And if volume is above average, it implies that it's institutional investors stepping in and picking up stock, okay? So as an example, to put it into perspective for you, let me just bring this up. If you look at, let's just go and have a look at NVIDIA right now, okay? So NVIDIA, if we go to the weekly time frame and you see in the right here, it says number of funds. That is increasing. So 8,610 was the number of funds that are actively trading this stock. Now, the institutional investor story that I'm talking about here is how many of those funds are committing liquidity to the marketplace, okay? Yesterday's price action showed that there was a lot of selling and price closed at the lowest range of its whole range for the day. So that shows me that even though it traded negatively, it did come in with volume below average, but it was more than what's been going on over the last 3 days. Now, the problem with the last 3 days is NASDAQ has been running up higher. And that's a problem for me because divergence traders are seeing prices rising, but volume is fading. So there could be an opportunity to start running shorts on the NASDAQ, because if the volume's not coming in and backing up investors' logic that everything is good, then we could be getting ready to roll over. That's not bearish. That's just looking at the data that we've got in front of us. Now, if we see today closing in the stock market positive, and the bar itself ends up above the 50-day moving average, then that would be a good sign for the market's trajectory to keep on going higher, because institutional investors have come in and actually bought stock. But based on what we're seeing right here, we're not seeing that. All we're seeing is positive days appearing on low volume, prices climbing higher. And then when we get a day where it's negative, it's in more volume than it is in the positive days. That kind of gives me the idea that we could be approaching topping behavior. We haven't set any moving averages, in the sense we haven't seen any price tests of it. And we've got a couple of gaps in the chart that we do need to realize in order for the market to continue higher. Now, with that being said, if the logic of the marketplace is going to top out and investors are not happy with things, looking at price action right now, you might say to yourself, hold on a second, Tino, but it's pumping. Yes, yesterday it was pumping, but it shot up to only come down. And New York is never going to pay a premium. It's never going to pay a premium. Most stocks right now are gapping up at the open. So if we go over and have a look at it, you can see that NVIDIA is gapping up at the open right there. It's currently trading at $142.12. Tesla is trading at just under $297. I'm going to get to Bitcoin in a second. I'm going to talk about Bitcoin order flow very shortly. And then we've got GameStop as well. They're gapping up at the open. Amazon, the Magnificent Seven, what you doing there, Tino? Here we go. So they're gapping up aggressively at the open as well. MicroStrategy, that funny asset, is gapping at the open. So fundamentally, companies or traders are plowing into the market. They are seeing that things are looking good right now. The jobs market is good, and it means that the businesses out there are doing okay. But what does it mean for the future? Which implies that even though the markets are moving higher, we need to see volume coming in aggressively to suggest that investors are really cool with the idea of the market moving up. Otherwise, any stocks that have gapped up, and if the majority of stocks are gapping up, it could imply that the NASDAQ could effectively be preparing itself, because it usually likes to front run and then roll over. They did it yesterday. They marked up, they came down. They marked up, then they ripped it to the downside again. And I'm sure something's going to come out today with the markets where Trump's going to be saying something. Let's just quickly go and have a look. I mean, Trump's going to probably talk about this Elon Musk relationship that he's got. Let's just quickly have a look at where Trump is today and what he plans on doing. Come on, roll call, where we at? Okay, so he's not got anything scheduled for today, which is kind of bizarre. It usually gives me what is going on today. Nothing's coming up. Okay, Friday, sorry, here we go. So he's got closed press. He's signing executive orders at 1:30 Eastern Standard. Then he participates in a swearing-in ceremony for the Secretary of the Navy. Listen, when he's doing those swearing-ins, he does answer questions, and someone will ask him something that can be related to the market and the economy. He will say something. He will say, yeah, relationships with China. That's going to do something to the marketplace. Then, of course, he's going to be then departing the White House en route to Bedminster, New Jersey, open press. So he might be traveling to the car. He might be traveling to Air Force One, whatever he's doing. Someone will say, Trump, where we at with China? Yeah, China's all that. Anyways, okay, what about Elon? Yeah, don't worry about Elon. Whatever, man. Let him rant on about the fact that I'm in the Jeffrey Epstein files. What a guy. Why did he come out? That is so dead. That's like trying to insult someone and you just take it back to the mum jokes. You know, where you're arguing with someone and then you're like, yeah, but your mum. You try and end it like that. That's exactly what Elon did. Anyways, and then he arrives at 6:10 p.m. out of the town, travel pool story. So just be careful when Trump starts running his mouth. Now, NASDAQ, what are you doing? Anyways, Bitcoin. Arkham, 660,000. Any activity on the blockchain? Oh, why is BlackRock getting rid of Bitcoin? 133 Bitcoin, 13 million. Nothing to be worried about anyways. I'm not too fussed about that. But still a balance of 660,437. Let's have a look at the liquidations on BTC. So we've got a significant amount of short liquidations. And of course, we've just eaten liquidity to the downside. So lots of high-margined, low-leverage traders have been liquidated on yesterday's attack to the downside. Usually what happens is when this usually incurs, when price drops and they absorb lots of liquidations, the opposite actually occurs, where the open interest comes into play and everyone starts running shorts, and equally a reversal back up, okay, shakes those traders out and makes the same traders that were in the move to the upside go back in with a commitment that things are going to keep on going up. They will then fuel more positions to be open for them to go and attack later on. So they'll eat the short liquidations. They're attacking the high margin ones right here, which are these dark blue ones, okay? So they're going to be attacking those with the intention that they could effectively come back down and eat these guys' positions. Now, is the expectation that Bitcoin's going to continue to the downside? From a structural point of view, maybe. If you look at the higher time frames, we go to the daily time frame, just to put it into perspective, where are we with the 5 and 13 EMA? Bitcoin is still trading below the 5 and 13 EMA, and yesterday we said exactly the same thing. Wait until the 5 and 13 EMA comes into play. Why? Because if you did yesterday, you would have got Bitcoin at a cheaper price, because then it's now made the reversal back up. You're now back at the same point. It's still not able to sustain itself above the 5 and 13 EMA. Until it gets above that point, there's no point in buying Bitcoin, because the same way it goes up towards that point, if it can't get above it, then you know that you could get Bitcoin on the cheap. So that means on the next day that you come to the trade or you come to the markets, you can anticipate that Bitcoin's going to try and make a recovery. Now, a recovery, if you were buying at 100,000, okay, which did trigger a lot of bids, if you go to the actual order flow, look at these bid orders right here. Man, these guys were loving life. 20.6 million at 100,550. Now Bitcoin's moved up pretty nicely to 103,926 with a high of nearly 104,000. They've made a nice return, a perfect return. But the problem that I've got is they've gone in and bought Bitcoin, but they've equally sold it at the same time. You don't want them selling. You don't want them to sell too much. You want them to retain it. But that's the problem. Wall Street does not have, I mean, we can't assume it's just Wall Street, but you can't assume that they're not going to go into Bitcoin and exploit these price action behaviors. That's why short-term holders of Bitcoin seem to be the reason that Bitcoin's price is starting to correct and come down, because they're just taking profits, which is then going to again send them to a position where they're going to be like, when can I step in again and take advantage of this volatility? And that volatility got exploited last night. Now it's come straight back up and put them back into the same zone where they were indecisive as to whether or not they should be buying Bitcoin, okay? So when you're looking at the daily time frame, those of you that are looking at this on the logic, maybe Bitcoin's going to come up to retrace to go forward, okay? Wait till this candlestick closes, because then the weekend with low volume will then bring Bitcoin's price further up, maybe stay above this candlestick range, trade into the 5 and 13 EMA. And what you could end up getting is the rise, the retrace, the continuation to the upside. But you'd have to wait to see how price behaves at this candlestick range. And of course, the 5 and 13 EMA. The 13 EMA is red and the 35 EMA is yellow, okay? So use that as a gauge to work out whether now is a time to buy Bitcoin. But if you do buy Bitcoin, okay, aim to try and exploit moves between 2 and 3,500. Okay, people buy Bitcoin when it moves up 5 cents with a price projection of 300,000-400,000. The math doesn't make sense. Capish? Questions? Questions. Hey, it's Tira. No, this payroll causes the bond market to go down and yields to go up, which is not good. This is correct. We just quickly go over to it right now just to break it down just from where money is going, okay? Just to help you understand the logic of money right now for anyone that is new to the live and what have you. We pay attention to what all the other aspects of money is doing, various asset classes. If you're a platinum member, you'll know that I project positively correlated assets. But those guys know that those assets are no longer positively correlated because of the environments that we're in. And what I'm about to dive into is going to help you understand that, okay? Right now, the word on the street is that everybody's going into safe havens, which is the euro. Forget what euro's doing now. And the only reason why we're looking at that is because investors are going to take advantage of the fact that the euro is cheap to use because they've just decreased their interest rate yet again. Okay, 2.14% is the new rate from 2.45. So euro is going to be cheaper for investors to put to work. We expect euro to continue to the upside. At the same token, the uncertainty about gold's price and investors' expectations of where we are with the war and the trade talks and tariffs, the expectation that interest rates are going to be cut, because when interest rates are cut, gold's price works inversely to that. So interest rates go down, gold's price goes up, even though gold is a zero yielding asset. investors are seeing that the yield that they're losing on the US dollar is then replaced by going into gold. And of course, gold's price will increase as the interest rates go down. Okay. With that being said, going over to the dollar dominance, we can see that we are starting to see a bit of a movement to the upside, which makes sense. Now, this is what I mean about the positive correlation with the stock market and the various six assets. When the stock market goes up alongside the dollar, it means investors are transacting on dollars, or should I say they're selling euros, going to dollars, turning those dollars into purchases on the stock market. Look at the NASDAQ right now. So you've got the dollar dominance going up, happy days, followed by the NASDAQ moving up as well. So what are investors doing? They're buying or exchanging euros, and then converting it over to dollars, putting those dollars to work by buying stocks. Now, what you've got to take into consideration is this. The dollar dominance is 98, so there's no purchasing power. If you remember what I said yesterday, that when you see the dollar rising and stocks rising and assets like Bitcoin rising in relation to the dollar dominance going up, it implies that investors are trying to take advantage of the small appreciation in the dollar. In other words, right now, they're exchanging euros into dollars, but they're getting a lot of dollars because of the conversion between the euro and dollar. So if you've got a lot of dollars and at the same time, your dollar is increasing in value, it forces you to go and buy assets paired against the US dollar so that you can just buy more of that asset whilst the dollar is appreciating. So it's like a positive correlation. When Bitcoin goes up, dollar dominance goes up, doesn't make sense. It should be the inverse. Bitcoin up, dollar down, because you exchange dollars into Bitcoin in principle. But because dollar's going up and Bitcoin's principle is going up as well, it means investors are just taking advantage of the fact that you can exchange more euros, less euros for more dollars, put those dollars to work, and it inflates the value of it going up, encouraging investors to jump in on the idea that if my dollar value is increasing, that is reducing what I have to spend on other assets paired against the US dollar. That is complicated, I know, but just look at the candlesticks. It gives you most of the story. But having that in the back of your mind is going to help you understand where perceived value is. Because if you understand where perceived value is, it's going to help you understand if investors are favoring safe haven stocks like, or the euro, should I say, safe haven currencies like the yen, the euro, and gold, or are they going to go into risk on, which is the stock market where prices are going to go up. Speaking of which, going over to the actual bonds market. 2-year yield is up 2.4%, ladies and gentlemen. That is awesome. So what does that mean? 5-year is up nearly 2.5%. What the? 10-year, 4.4. Hold on. 30-year, 0.9. Usually what happens when the yields go up, the bonds go down. Okay? So what is it they want? Well, they don't want bonds. Looks like they're going into risk. Are they pricing in the rate cuts? That could be the case, ladies and gentlemen. What would be a happy medium is if the bond market goes up and the stock market goes up, the yields go down, which means they want low risk and they want high risk, okay? Which tells me that this could be a premeditative move, that they're going to inflate the market, move it up, because smart money sells as prices go up. Realistically, do we have good news in the market? Do we really have good news? No. We've got trade looming, okay? A stubborn Federal Reserve that will not cut the rates. European markets getting their rates cut, which means it's cheaper to borrow euro, cheaper to borrow yen. It's just short-term movement. The only way that this would validate the move to the upside, guys, is if today we close on very strong volume, which would then solidify the idea that institutional investors are buying stock. We don't see that volume coming in strong, then this move to the upside is just purely for speculators trying to grab onto yield, make a bit of risk, get a bit of risk, make some money, and get out. Okay? Now, just quickly putting it into perspective for you all with Bitcoin, it is not really doing too much. Nice little V-shaped reversal right there. We are back to the psychological ranges, ladies and gentlemen. Again, a very important area, and I gave you that little flavor yesterday on understanding this logic. The market is now open, and at the same time, you want to just make sure that you're waiting until the Brinks box is complete, because that's going to give you the range of where price is likely to go. You want more on that, just go to the Traders Reality website, and there is a whole PDF playlist, watch list, checklist And you can access all of that as a platinum member. But remember, the homepage has a PDF. Just download it. It's free. Download it and read it, and you'll understand exactly what I'm talking about with this strategy. All right. With that being said, guys, mad love and respect. Hope you've enjoyed that. Hit the like button on the way out. And I'll be tuning into you all next week. CPI, baby. Mad love and respect. Peace.